I could be wrong, but I've seen so many fraudulent tax returns come across, usually people who are English as their second language, and they sign their name and they're promised this big return, and I'm sure they paid a big fat fee. And I look at their income and I'm like, you weren't paying taxes anyhow because you only made 20 grand last year. Like, this is a true story. Like, I see housekeepers down off of I Drive and someone's doing their taxes and I'm like, A, these things are so fraudulent and false, but B, you didn't have to do this. You don't make enough money to pay US taxes. But they went to a tax preparation. No, you need to go get a CPA. A CPA can sit down with you. A CPA can show someone, and look, and we can't advise someone how to do taxes who are not CPAs. What we can tell someone, hey, ma'am or sir, based on what you're trying to accomplish, I need to be able to show that you earn this much money per month in income. Hey, ma'am or sir, I can tell you this. When you and your CPA are sitting down, anytime you deduct meals, entertainment, I have to count that twice against you. But if you're writing off miles, I can actually add back in some of the miles that you wrote off as income. Like, if you're really smart at what you do, you can sit down with your client and you can tell them how we calculate income. Let them and their CPA sit down and do their taxes. We shouldn't be involved with that. But I could wholeheartedly tell you, hey, Sam, just FYI, when you write off miles, I can add some of that income back in. But if you write off meals and entertainment, I actually have to hit you twice. If you're self-employed and you entertain people for a living, if you spent $10,000 on meals and entertainment, you can only write off half of that. So when I got your tax return and I said, oh, you wrote off $10,000 in meals and entertainment, the mortgage underwriting community and the risk assessors are smart enough to say, oh, but you spent 20. You only wrote off 10 because the IRS only lets you write off half. I need to double it and count that double against you. So, hey, Tyler, you didn't make 50 grand, you made 40. Now, when I look at Tyler, who's self-employed, I look at his tax return, and he also wrote off 30,000 miles. Maybe he drives a lot, on the road, door-to-door sales, who knows? Well, the IRS also says that his 30,000 miles, he got paid, I'm just going to rough number here, I'm wrong with the number. He got paid 30 cents a mile. Well, the IRS says that of the 30 cents a mile, half of it was what we call depreciation, wear and tear on his vehicle. Well, I know because I took MGIC self-employed course on calculating income, I can add any depreciation back in as income. So if I have a self-employed borrower, remind me, I'll tell you the story about that guy at CC's Pizza, but who wrote off $30,000 of miles, I can probably add back in 10, 12, or 15,000 of that because it was deemed depreciation, and our industry lets us add depreciation back in as income. So it's just understanding how to calculate income for self-employed. And that's back on my becoming an advisor. The people who think this job is just taking out some information, running credit, quoting a rate, and running a payment. No, they have to be able to sit down with their self-employed borrower who hasn't filed taxes in 2 years and say, oh, awesome, hey, you're gonna go sit down with your CPA. Let me give you some notes to share with him or her. Share this with them so that they know. The standard deduction went from like $12,000 to like $24,000. Once that happened, it took any W-2 person who had legitimate business expenses, which I use air quotes because so few people did, but they still wrote off business expenses, and just said, you don't have $24,000 worth. So at that point, it makes more sense to take the standard deduction than it ever would to itemize your deductions. But for your person, you could tell them, hey, if you have anything to depreciate, take advantage of all the depreciation you want. Maybe don't get overly aggressive on your meals and entertainment. No different than if someone does itemize their tax returns, I just let them know, hey, look, things like mortgage interest, that doesn't count against. Like when you write off your mortgage interest on your taxes, it doesn't count against you. When you write off all the charitable donations you gave, depending on if it's real or not, that doesn't impact you. But there's certain things that do impact you. And it's when you start telling the US government that you had to spend X in order to do your job. Okay, well, you had to go out and spend $10,000 on uniforms when you work in an office. I've seen this, by the way. All right, cool. You make 10 grand less a year now. Well, I'm like, which one are you a liar or did you make 10 grand less? Because one of the two happened here, guys. Either you lied to the government, which by the way, I personally, I'll stay off my soapbox, I have an issue with. That impacts me, impacts my children. Is that you basically saying that you matter more than me, so you shouldn't have to pay. But I'm sitting here paying? Nah, like if it's legal, I want you to write it off. If it's not, then how about we all just kind of chip in and do our own part? You know, I'm fine paying more than most. I'm just not fine with people not paying at all.